Whoever's editing this, hello. La 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 la. Warming up the voice, you know. La 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 la. Hey, everybody.
Hi.
Hey, we're just letting everybody get on here, logging in and everything. So we'll get started here in a few. All right, 6 o'clock. We'll wait a few more minutes. Good to see everybody. Chris is mid-flight right now. He's supposed to land in about 10 minutes in Chicago. He was out in Utah and had to change his flight up. So he's flying right now, but he'll be joining us shortly. And then our two special guests, Jeremiah and Caleb. Looks like Jeremiah, hey, man, how's it going? And Caleb should be on just shortly as well. So wait a few more minutes like we always do, and then we'll launch things and get things going. How's everybody been doing?
All right. I am well. I am here. Good to see you, Stephen.
Hey, Jeremiah, what's happening?
I'm good, my friend. Thank you.
Good. And where are you again in the country? Where do you live?
Man, I am in South Carolina these days.
Okay.
So on the East Coast, in the Greenville, the northwestern portion of the state, we call that the upstate. So Greenville, South Carolina.
Yeah. Okay. Very cool. It's neat up through there. I was at a wedding somewhere up near that area a couple of years ago, but pretty place.
Well, we've done what we can on a modest budget, you know.
I hear you. All right. And looks like we got Caleb logged on. Very cool. All right. Yeah, we'll just give it a few more minutes, let people log in. Looks like I see some new faces on here and great to see. And I know I spoke to quite a few people that weren't going to make it live, but are looking forward to the recording. So that'll be good as well. But we'll give them a few more minutes to get logged in live. And then, like I said, Chris will be joining us by his phone from the airport as soon as he can. We'll go from there. Any football fans out there? Everybody happy to see football back? Yeah. I got my Steelers, so let's go Pittsburgh.
Well, in our neck of the woods in South Carolina, Clemson is our team. So I do actually have historically done a lot with the Athletics. And so they've been number one, or top 10 in the last few years. So it's college football area where I'm at.
Yeah, man.
I'm a proud owner of the Green Bay Packers, so I'm glad to see that we got a W on the books.
Do you live up that way, Caleb? Are you in?
I grew up in Wisconsin. I now live in Denver.
Gotcha. Cool.
Yep.
Caleb, good to see you, my man.
Oh boy, Nancy.
Uh-oh.
We need to have a conversation after this.
Hi, Steven. This is Rodrigo here joining.
Hey, Rodrigo. What's happening?
We conversed this morning. Yeah,
Yes,
glad
sir.
to be here.
Yes, sir. Yeah, I see a couple new people. Fabian, how's it going, buddy?
I'm well, thank you, Stephen. Appreciate it,
Good.
and thanks for helping my family earlier this week with providing some information and getting them, a little more informed on the banking system.
Yeah, absolutely. And that's what tonight's all about. So you're going to be able to get a bunch of more knowledge and share it with them as well. I give about 2 more minutes. Whoa, I can see myself in feedback on Claude's. Look at that. How's it going? What do we got? REI or what's the bottom of your shirt? Die. Oh, man. All right. I like it. That's blunt, to the point, right? Yeah, Chris has got some new shirts being done up right now for Money School and Money Multiplier, and they got some fun little slogans on them. But
Pretty awesome. Listen, it's real for me. It's REI or die.
absolutely.
Bottom line. So, REI, but now it's REI and a bunch of other things, right? The things that you're teaching me.
Yeah.
You're going to teach me.
Absolutely.
Personal banking. So much stuff. I'm inside of your class right now. Totally awesome.
Absolutely.
Thank you for having me. And hello, everybody.
Yeah, great to have you here.
Thank you.
A couple other new faces. Beverly, how are you?
I'm good, thanks.
Great.
Am I here? I am.
There you are.
No,
All right.
I'm in my car though, and I got to drive home, so then I can. So I might have to put my video off and put my phone down, but I'll be listening.
All right, that
and
works.
talking.
Be safe.
All right.
Absolutely.
Yeah.
All right. All right. Well, it's 6:05. So, all right. Well, it is. Let's go ahead and get things launched. So, welcome back to another 2-hour group coaching call on MSTV, Money School TV. We've been doing these now since the beginning of the COVID lockdowns back in March, and they seem to be getting better and better every single month. So, it's great to have everybody here. My name's Stephen Nagy. As most of you know, I'm filling in for Chris right now. Chris is out traveling on business, making things happen out in Utah, and he's on his way home right now to his lovely wife and baby girl. So I know he's excited to get home, and he switched up his flight to get him there tonight instead of having to wait to get there tomorrow, so he could, spend an extra night with his family. So he'll be joining us here shortly once he lands in Chicago on his layover. But nonetheless, the show must go on, right? So you guys are stuck with me hosting this evening. So hopefully that's all right with everybody. But it's great to see all the familiar faces and all the new faces as well. So as these 2-hour group coaching calls go, as most of you know, there's not really a set schedule or set agenda. So it's basically driven by our Money School members. So those of you watching the recording, next month, get on live, because those of you that are live are going to be able to interact, ask questions, and really get a whole lot out of this. So like we do each month, we bring in 1 or 2 special guests that are experts in a special area and special field related to real estate investing, related to alternative investments, related to private lending and private funding. And so this month we've decided to make it all about the Money Multiplier infinite banking system. So we brought on 2 of the most well-known experts in this field. Caleb Williams, and it's Williams, right, Caleb?
It's Guilliams.
It is Williams.
Channel the inner guacamole.
All right.
Okay.
I thought Sean had told me it was Williams. So Guilliams. All right. So we got Caleb Guilliams and Jeremiah Dew, of course, is with Cash Compound. And I'm going to let these guys introduce themselves here in just a moment. And Caleb just wrote a new book called The And Asset, which is awesome. So I'll let them tell you a little bit about themselves and what they do here in just a second. But the way this is going to work is, if you do want to interact, ask questions, I know none of us would mind if you just interrupt, or, so if you don't mind keeping yourself on mute until you are asking a question, just in case there's any background noise or anything like that. Otherwise, we'll be good to go. If you have a video, throw yourself on the screen. If not, don't worry about it. And if you don't have a microphone or don't feel comfortable, asking a question live, by all means, type it into the little chat box over there. And I'll be reading the chat box and monitoring that. And we'll be sharing some information and links on the chat box as well. So, we're yours basically for the next 2 hours here. And Anybody that wants to chat anymore, past that or talk a little more personal, if you don't want to ask a question here in front of the whole group, but you want to chat about it, I'll throw up the link so you can book a call and we can definitely schedule some time to talk over the phone and spend a little one-on-one time. So thanks for being here. Thanks for being an MSTV member. And, a lot of you I see here every single month after month. So it's great to see that as well. So with that being said, let's see who wants to start, Caleb or Jeremiah?
All right,
Jeremiah.
then.
All right.
Okay, I'm up first.
Yes, sir.
Ladies
Go
first,
ahead.
as they say. Appreciate that, Caleb. So my name is, once again, no, most people call me JDew, actually. So if I refer to myself in third person and say JDew, please stick with me. So I'm JDew. I live in Greenville, South Carolina, and been partnered up with Chris and Steven in the world of the money school and what they've been doing for, I guess it's kind of, there's been a little bit of an organic process of partnering up with them for the last almost 2 years, but really officially over the course of 2020, and sharing with people what we do at the Cash Compound. And that's all about banking, like you said, and we fell in love with it. And when I say we, some of you actually may even have already been introduced to my brother, Jonah. And so we're the Cash Compound Partnership. And for the last about 3 years and some change, what we have been doing is educating people on the consumer side of helping them understand the banking process and having a personal banking system for themselves. So all the stuff inside the Money Multiplier. And for those of you who might also already be connected to the Money Multiplier, what the Cash Compound does is we are the educational platform that helps you once you've started the Money Multiplier. So we're kind of the back-end customer service and the customization process of your personal banking system. So you see Chris and you see Steven, they're coaching you and helping you understand the concepts of what we all like to call IBC, infinite banking. And what we do is customize it for you once you've begun. So I've personally been practicing that for the last 6 years myself. Me and my brother have both been doing that, for those of you who do know Jonah. And we're both married with our own families, living in Greenville, South Carolina area. And I'm happy to be here tonight to answer questions, to chat with you guys about what you're doing and what you don't understand, because that's where we all started. So everything is on limits for you tonight. So I appreciate Steven having me here tonight, and I'll kick things over to Caleb, the better half of our two special guests tonight.
Well, at least you stayed on brand. So hey everybody. I want to just say I have proudly had Jeremiah and the man of the hour on the show. So yeah, I have a podcast as well. And it's great to talk about these topics. But it is a pleasure to be here. And I run a company called Better Wealth, and we are really passionate about teaching the IBC. I call it the and asset strategy. Essentially, the idea of taking back control, being efficient with capital, and best investing it in the things that will help you get closer to your results. And so this book put me on the map. It's called The And Asset. If you do not have a copy, get a copy. I think it'll better help understand all this. And my epiphany came when I realized that the world was telling us we had to choose between compound growth and controlling capital. And I'm telling you, you guys, you do not have to choose between one or the other. If you know the rules of the game, you can really take control of capital and have the power of what some people call the eighth wonder of the world. And so overall, it's a pleasure to be here. I'm just a big fan of what's going on, and I want to be here of service. And you can check out what we're all up to at betterwealth.com. That's our website and business, and we've got a lot of interesting resources there.
All right, great. Yeah. And, you guys have a lot more experience when it comes to infinite banking than, myself by a long shot. I just got involved with it this last year with Chris, and, it's been mind blowing to me. I was a financial planner for 2 years. A lot of you know my story, but I was a financial planner out of college and had an opportunity to travel the country and learn real estate investing and work for some training companies and coaching companies and really dove into real estate investing. So I've been in the, alternate investment space and the investment space since 2005. And I never knew anything about infinite banking and that you could use whole life policies, as a banking system, and the power of what they do between the uninterrupted compounding interest and being able to use that money simultaneously to grow your wealth, multiple ways. And it's been amazing. So it's been really cool for me to be able to implement that into all the coaching and training I do on the real estate investment side, and, private funding and raising capital for deals, and be able to, find new sources for funding deals. This has fit in so nicely with everything, I was already doing, and we've been able to work in a money school. And it's just blown my mind. I mean, I've talked to some, very, very, very successful investors, multi-millionaires. And, we start talking about this, you always kind of get hit with that first, oh, no. I've heard about these whole life policies. I don't want anything to do with that. And once you start explaining a little more, hey, this is not, what you've heard before. And especially the way Chris teaches it. I know Caleb and JDew, and the way you guys do this. I mean, it's mind blowing. And I get that reaction from literally everybody I talk to. I don't think there's anybody that's ever stumped, that hasn't had that reaction. So it's been an incredible education for me. And I dive in and just read as much as I can. I mean, the resources, Caleb, I haven't read your book yet. It's on my list, and I actually got to get a copy still, and I'll do that. But JDew, I've been all over your cash compound, and you guys do incredible training, just the way you lay it all out. So, and thanks for putting that up over there, JDew, with your contact information. And I know with our money school students, you guys have a special access to the cash compound and the course. And I can put that link up too, so everybody has that if they don't have it already. And Caleb, do you have anything where somebody can get a book? Is it just from your website? Do you guys have any kind of giveaways?
Yeah. If you go to my website, betterwealth.com, you can get the book for the cost of shipping. And then we have a lot of other resources there that if you're into IBC, I mean, I've interviewed Nelson Nash, I've interviewed Chris, I've interviewed a lot of the key players in the space. And so I have a highlight, which I'll get the exact episode, but it's pretty much the top 8 to 10 people in the space and I chopped it all up, and it's the and asset highlights. And that would be a really good for everybody on this call to listen to, because I think it's going to fire you guys up for what you guys have and give you some ideas on how to use it. So I'll make sure I get the right episode so I don't lead you astray.
Yeah, absolutely. And I'm going to open it up where, because I want to start out with some questions and just kind of go over some things, because I know everybody came on to try and not only learn, but maybe get some questions answered. But just to give, myself and JDew and Caleb an idea of who, the audience is here, could you just put in the chat box, let us know if you, first off, do you have already a policy either in the process through applications, or do you already have a policy in force that you've been using? Is there anybody that is already in? I think most of you do, but I'm just curious if you don't mind putting in the chat box, if you have a policy, yes or no, already either started or in force. So Joni with a couple policies. Teresa's has one in the process, the application exam. Okay, so Claude, Rodrigo. I know Rodrigo, you're soon. Policy getting started. Okay. Funded mine last Friday. Have one in the process. Okay. All right, great. So it looks like most everyone in here is either in the process in applications, or they have just recently gotten a policy started. So that's what we're working with, JDew and Caleb. So a lot of these people, maybe, JDew, you probably have seen them come in. Thank you. So that's kind of what we're working with, which is great. We love working with, people that are newer to it, because we can open up, different ways to use it and stuff like that. And you'll be mapping it with them,
Right.
JDew. And, if anybody's more advanced on here, I'm sure we can get into some of that as well. So, but let's open it up. Does anybody want to start out with an initial, something you've been dying to ask, or something you want to start with?
And I'll say one or two things, since, I guess several of you would be introduced to us already at the Cash Compound. So great to see you in person. Hopefully I'm not boring you to death on our educational videos. We tried to break that stuff down so the average person at a high school, college level would understand. If they were interested in the information, they're going to understand what was going on. So as you guys tell us where you are, or what you want to know, I'll say a few more things here and let Stephen off the hook for a second, to just say that, Yeah, about 6 years ago, we got introduced to a presentation format of the banking concepts. So it was about an hour and a half type situation. I ended up seeing something, me and my brother, Jonah, saw stuff from two different guys, basically over the course of maybe 3 or 4 months. And what we realized was, wow, this stuff is real and it's the truth. And one of our main components of what we help people understand is we're talking about cracking the code to cash flow and building your wealth without ever locking your money up long-term, giving up control to other people, kind of like Caleb said, right? Hopefully we're speaking the same language for you guys. And third, to not take on risk with your dollars. So it's all in here just in case. So I'm here to talk about how great Caleb is as well in his book. Get his book. If you're lucky, before he ships it out, maybe he'll sign it for you. Wait. Oh, he did sign it for me. Okay, he signed it for me as well. I was wondering. So that's what. So if you've seen the crash course or you've been introduced into the tools course and things like that, we customize things for everybody who comes through Stephen and or Chris's program, and that's on the house is what we do. So ask away tonight, whatever you might want to know. But maybe you can even get me and Stephen and or Caleb to bounce ideas back and forth, because that first episode, I mean, the first word that was introduced to us about the concept around private banking, that we might throw around the jargon IBC or infinite. There's a million possibilities about what's going on. And we're all actually using the same base product / process to help people, and including ourselves, build our wealth. So I want you guys to know that there are things out there on the internet that'll confuse you. Of course, the internet is full of stuff that you can find, but we really are on the same page. And even though we may use kind of separate terminology or jargon for certain pieces of the system that, like Caleb mentioned, was brought to light and realized that it was existing for 200 years through this one particular product from Nelson Nash, the man himself. So his book, just in case you have clicked through our stuff on the website, let us know if you have actually, jump in the chat. Who's read this, or who has it, who's got it but didn't read it yet, who read it and didn't understand it, because that's me. You can raise your hand too. I read it and didn't understand what was going on the first time I read it. I was like, holy crap, I better go YouTube stuff. So that's how it started for me back in the day. And so get the book. You know, I did not have, and the other thing about me, and part of the reason you'll see some of the, just the familiarity of the way we speak about what's going on is because both, my brother has more of a financial background and a banking background than me, but I did not. I needed to make sure that this was a process and product that regular people, including myself, could get. If this is really true, my wealth can grow. I'm going to be able to have income tax freedom. If my money is going to be guaranteed, if I can use money and spend it. Sometimes we say save and spend money at the same time. I think Caleb has a phrase that's very similar to that. Then why do I need to be a genius? Why do I need to listen to Jim Cramer about all that? Like, I should be able to understand what this is. So we created the system to break it down for everybody. Now, I can get more specific, and I will, because most of you have a familiarity already or have started the process and potentially have already seen some of our video work that's getting you acclimated to your own banking system and winning with your money. So yeah, that's a little bit more about us. But we started out as regular guys. We realized that there was not an aftermarket educational system. Caleb has a similar educational process he's going to help you with. If you're working with him, we're going to help you with, because we realized, wow, once we get started, now what do we do? You know, once I have something 50 pages from some insurance company sitting in my drawer, like, what does it mean? And so we help people understand that banking is a verb. It's a process. You should be doing stuff. There's things for you to understand. There's ways for you to win. It's not a thing you bought. We're not here to use the word retirement over and over and over again. We're not here to say, lock up your money and there's a death benefit. That's traditional insurance. We're saying banking. Banking is a verb. And you'll learn all about that actually right here in this book. What is financing? Why is that important? How can you control it, and things like that? So anything you want to know from me? If not, I will turn it over to Caleb, or I'll start juggling. but you guys let me know. I was trying to figure out if Mitchell hadn't moved yet. I got him to move on that one. Okay, so it's not. I wasn't sure if it was just the background, but no, he's
Well,
smiling now. Okay.
or we
No,
could
no,
have a
I'm here,
conversation-
man. I'm here. I'm listening.
or we could have a conversation on who's better, the Packers, the Bears, but that'd be pretty.
Seahawks, how about that?
Yeah. But I just put in the chat 2 podcasts that I've done that will be very beneficial for everyone listening to this. Nelson Nash, like he just Jeremiah just talked about, he passed away. But I've had the honor to learn from him and actually capture a full interview with him. So in that, he explains his book and the movement. And then I also put together a highlight reel of it's the And Asset Highlights, which is 110 on my podcast. And that's where I take a lot of short clips from different people that I've interviewed that talk about the different advantages of overfunding life insurance and using it. And I'll just say this before we open it up for questions. The reason my book is called The And Asset is a lot of people are focused on the end result. And they were arguing that life insurance is better than your 401k or better than real estate or better than your business. And I don't want to go down that road, because if you actually want to create wealth, you're going to invest in things like business, real estate. You're going to invest, you're going to take some risk and create wealth. So I'm not interested in saying that one thing is bad. I think that's a very elementary way of thinking about money. What I am interested in is how can we be more efficient? And there's a reason why the banks, corporations, and the ultra wealthy store their money in places like life insurance, because it's a contract that allows your money to grow tax-free and also gives you the ability to leverage and do other things. It creates an and conversation. And I think that's when I had the epiphany of like, oh my goodness, like that's powerful. And it's not, I don't have to say like, oh, don't do this or don't do this. I can have a more empowering, like this and what you want to do. That's where the conversation comes. So I'm here to take any questions, and I'm grateful to be here.
Yeah, Caleb, and that's a good point, because I get that. I mean, I do a lot of these phone calls, initial phone calls, and I get a lot. Why would I do this over a 401k or an IRA or something like that? And that's not what it's about, right? It's like you said, it's an and conversation, because it's not one is better than the other. They're just different, and they can work together, So that's a great name for the book, and a great way just to look at this entire, system and process. And it doesn't have to be one or the other. It can be both. It's not, should I put my money in this or real estate? You can do both. It's just like Chris always says, it's adding that one extra step with exactly what you're doing now, just adding that one little extra step in between that makes everything that much better. Right. So, it's a great name, but yeah, let's, so who wants to kick off a question? Who's got something for Caleb, JDew, myself? What's up, Claude? Go ahead.
I do. I was investigating some investment opportunities surrounding crypto and real estate earlier today, and I'm just trying to put everything in order in my mind. And the question that I have, if I wanted to fund, say I wanted to fund a real estate operation, would it be wise for me to first establish an insurance banking policy and fund that, and then fund a self-directed IRA that will then in turn fund my businesses or fund my other investment opportunities? I'm trying to figure out the best way to leverage insurance banking coupled with other vehicles that not only protect the assets, but have the best tax advantages.
Jeremiah, do you want me to take this one first? So Claude, do you mind it? You don't have to answer this question, but how much money are we looking at right now on this venture that you're looking at putting towards?
Okay, I'll give you I'll ballpark some figures for you. For the real estate venture, which is actually to be a wholesale / creative finance marketing business, to try to get real estate deals.
Yep.
Right. And so I'm looking at setting aside about $60K That's
Okay.
3 months of operation for that business.
Okay.
And crypto is kind of new to me, but today I was thinking about funding it with like 50K.
Okay. So you're sitting on money right now.
No, I'm not sitting on this cash right now, but I will be very shortly.
Okay.
And
Okay.
so I'm trying to get my ducks in a row and be ready to deploy the capital in the most wise fashion.
Okay. Okay. So I'm going to tell you the pros and cons of using life insurance. Okay. The con of using life insurance, there's two cons. Number one, not everyone qualifies health wise. And con number two is you have less capital to use after putting it into a life insurance policy. So typically the people that don't like this strategy want to use every single dollar. And they're like, hey, I put $60,000 into life insurance, and it's like, I want all 60 to leverage into crypto, and you don't have that.
Right.
So that is, I'll be very upfront with, that is the quote unquote con. That's what everyone will like. That's why everyone thinks life insurance is an awful investment. The pro though, is you get to fund an asset that's going to literally grow for the rest of your life and give to the next generation or the charities or whatever, tax free. So you have one decision that creates that velocity of that lifetime growth. And you just simply, if you put 4% or 3.5% over 30, 40, 50 years, that's what that $60,000 would be worth in the future.
Right.
And you would have the ability to leverage a portion of that, depending on how it's set up, a portion of that to fund other things. Now, the other thing that I want you to know is there's risk in everything that you do. Just because you have life insurance doesn't make it a magic bullet. But so short term, you'll have less money. Long term, though, you'll have the velocity of a dollar doing more than one thing.
Okay, so maybe I didn't make it clear. I won't stop there at funding the policy, right? It won't be me stopping at 110K, right? From what I've learned so far, is something that you should be willing to continue to fund over time. Right. Regularly scheduled, deposits and increments. So that reminds me of another question. Is it wise? Because I know that you have to, I understand that not all the money is available immediately. At best, you have access to a portion of it, I think after 30 days or something like that, right? So I guess the question it still remains, is it a good vehicle to fund a self-directed IRA, right? Let's just ballpark a round figure. If I put in 100,000, how soon would I have access to 100,000? How much of that will I be able to leverage in a loan from the insurance policy, provided that I qualify? And is it a good vehicle? Is it feasible for me to fund my SDRA with a loan, self-directed IRA with a loan from my insurance policy, and then use the capital from the self-directed IRA to fund my ventures?
I guess one of the big questions I would have is why the SEP IRA?
Well, self-directed IRA,
yeah,
just for tax.
Claude, real fast. So a self-directed IRA, be able to contribute about $6,500 a year into it. So you're not going to have a lot in there anyways. So that, you know what I mean?
So people are investing in real estate.
Right.
So
from their self-directed IRAs, from what I understand.
Yeah, typically, yeah. So like a 401, if you had an old 401k with $100,000 in it, as an example, you could roll that over to a self-directed IRA, and then you would have the capital to go out and buy a house. If you're starting an IRA fresh, there's contribution limits. So you're limited to $6,500 a year to put into that.
And here's the other big thing is, and that I'm glad you mentioned that, is if you already have money tied up in a 401k IRA and you want more control, a self-directed IRA can be a good tool. But one of the biggest flaws to the whole IRA market is you're postponing tax to an unknown date, where our country just printed trillions of extra dollars that we don't have. Right. So the reason I ask is, it's my understanding that you're like, does a policy make sense to fund? put into a self-directed IRA to then do real estate. My
Right.
question to you is, I don't see much value in the self-directed IRA. I would just potentially look at what does it look like to overfund life insurance and go directly to real estate.
Right. And the other spot on that is that you would want to go with a Roth IRA because that's tax-free growth. So
Right.
you definitely want to go that route. But again, there's no way you can dump that kind of money into it. So that's a
Those
slow play.
contribution limits
After you
are-
take a loan and put 6,000 of that into the self-directed Roth,
Right.
that's a conversation to be had, right? And that would be based more on your goals, what you're accomplishing, you know, what you're buying and all that. And we could definitely have that conversation. But
Okay.
generally speaking, yes, you can. Is it a great idea? It depends. Right, Caleb?
Okay. Thank you. I didn't know about those contribution limits.
Great question. Yeah.
Yeah. So thank you for that information.
And we have a really good section in MSTV. So if you log in, there's 6 or 7 videos on self-directed IRAs, and it goes over the regulations, the limitations, the contributions, withdrawals, all that stuff. So definitely check that out too.
Thank you, Stephen. Caleb, thank you, guys.
Yep. That was a great question.
Thank you.
Yeah, definitely. And you know, and people do ask that a lot. Can I use a 401k with this insurance? And the biggest thing on that is retirement accounts, 401k, SEPs, IRAs. Those are called qualified funds. Okay. Qualified funds are something the IRS sets contribution limits. They set when you can take the money out. When you're 70, you have to take the money out, et cetera, et cetera. This insurance policy is non-qualified. Okay. Meaning, it's set up in a way where you don't have those limitations because you're using the money in the form of a loan. So you can use it anytime you want if it's available. You can do whatever you want with it. It doesn't matter how old you are. And, you know, any profits you make from using that money, that's your money. You can use right now those profits. You don't have to defer it to later. And that money in that insurance policy is growing for your entire life completely tax-free because when it gets paid out in the death benefit, it's not taxable. So by doing both together, you do get the best of both worlds. But you tell me which one is more powerful, you know, and it does depend on the situation. But, you know, I've been a huge proponent of self-directed IRAs for many, many, many years. And it's a conversation to have now, you know, which one do you look at? Because these insurance policies give you so much more flexibility and power, really, and control.
So the last question I have, and I'll be very brief, is I've had some health challenges in the past. I consider myself, you know, fairly healthy at this point. Could you explain what some of the types of health issues that would prevent one from starting, you know, a policy? How does that look like? You know?
Yeah, absolutely, Claude. And I'll jump into that. But let's real fast before we do, we'll take a quick brief moment to welcome Chris Naugle to the stage.
Hey everybody, how are you? Sorry, it took a little bit. Kind of can see from the background. I was on an airplane, so running a little bit late. I hope you guys are all doing well. I literally just sat down, so I'll let you guys continue on, and then I'll jump in a little bit.
Absolutely, yeah. Welcome, Chris. And I know you'll get in trouble without that mask on, so we understand.
Yeah, for sure.
But it's good to have you. So yeah, Claude. I mean, as far as health issues go, you know, there's some disqualifying things that can occur. And, you know, so it's one of those things where we can either try and push it through. Now, if you have a spouse or an adult child or somebody in the family close to you, the great thing about this is we can use their life for the policy, but you can still be the owner of it and you can control it. You contribute to it. You take the loans, you own it. You do everything with it. You determine who the, you know, beneficiary be. It's on somebody else's life. So if you do have medical issues that do force you to become declined, we have other options that we can explore and discuss and most of the time find a solution for you. But yeah, great question. I think you're muted, Claude, muted.
Thank you. Thank you very much. That was a great explanation. And I'm looking forward to learning more. So I'm going to shut up now and give other people a chance to contribute.
Jump in there, man. Thanks for kicking it off for us. Those are great questions. JDew, do you want to add something?
So I just wanted to say one thing that we help people understand in the health side. So there's a few things that we're here to talk about money, your life, your wealth. And there's lots of things that you want to do with your money, your life, and your wealth. Chris, if you've ever heard him do a presentation, if you've seen him talk about infinite banking and the money multiplier system, he's going to talk about buying cars, right? We love to use that as an example. We do too. We love it. that's just because it's a universal theme that most people need to buy cars or pay off debt. And you'll see us use those examples. However, those things have nothing to do with life insurance and your health, right? So a lot of times there's a disconnect in people's minds because we are going to use a product that has a 200-year-old tradition to check in to see how your coronavirus cough and your swine flu is doing and whether or not you have, 4 ventricles in your heart and all that stuff. But those things don't have anything to do with your money and wealth. So that's where there's a little bit of a distance if folks don't quite understand, like, hey, it could be disqualifying, like Caleb said, or something like that. But Stephen brought it right back around and reminded you that there are normally people in your life that you can also utilize for the process of banking, because the product needs a body. Okay. Nobody has ever gotten life insurance before that wasn't alive. Okay. So we need somebody living. You guys look great to me, but these insurance companies are stingy sometimes. And they're like, hey man, you had COPD back in the day. So we're going to maybe ask you a lot of questions or disqualify you. But I want you to understand as well, when you start that process with these guys, with Caleb, with us, you are not obligated. Do not think that there's some sort of issue. They're going to pull your credit. They're going to ruin your anything like that. So if you want to go down that path, Claude, and you have not done it yet, there's no obligation for Claude. So just get started. Claude looks like a great guy to me. So we're happy to help you start that process. And we're going to go until the insurance company says that Claude doesn't qualify. There's no obligation to Claude. No big deal. Yeah, no big deal. So that happens often with people because we help so many people do this. There's lots of people who have previous health issues. Maybe they're overweight or whatever. And there's all our friends out there where Caleb is, they're smoking so much these days. They want to ask us all these questions, right? With, hey man, so I'm ready to do this, but let me ask you something real quick on the side. And we always know what they're going to ask. It's totally fine. So don't feel obligated. It does not cost you money to go through the application and underwriting process to see how well the insurance company likes you.
Gotcha.
And then if you have checked into this book, realize there's a great example, page 82, 83, I believe. So you've got I'm a family guy. I have 3 children. And we all think about this historically with life insurance, but we don't think about it with banking. So let's remember historically for just 1 second. Your great-grandma owned life insurance on your grandma. They all did back in the day, right? So remember, your kids, your business partner, your spouse all qualify as people you can potentially have a banking system, a vault, your own system on, but they're not you. So I have a 4-year-old son, and he has a life insurance policy built for banking, a banking system, IBC. Now, does he own it or do I own it? So let me ask you a better question. When the kids come across the street to play in our house, and my kid gets mean and he says, hey, you can't be on our grass. This is my grass. This is my yard. Does he own that grass or does dad own the grass? See, dad owns it. Okay, so remember that. You can own them on your children, on your parents, on your business partners and things like that. So just keep that in mind. Don't let that deter you from, hey, I got to get my health right. I got to stop smoking. I got to lose 10 pounds before I call these guys to get started. Don't worry about any of that. It's irrelevant.
Thank you.
Yeah.
Right, great. All right, what kind of who's next? Let's see it. I know you guys have some questions out there.
So I see Nancy. So I'll comment on some of this. Nancy said, because of COVID, I'm ineligible for IBC. Maybe you had COVID, or maybe that's something that disqualifies you these days. Your age, right? Your age deals with life insurance, but age has nothing to do with you buying real estate, does it? Nobody ever asks how old you are when you want to invest in somebody's deal. But life insurance does ask how old you are. So yes, there are some parameters around that. Obviously, life insurance is a bet from the insurance company on how long you'll pay premiums, AKA when you'll die. Okay, that's when you break contract. You die, you stop paying for it, right? But see, you got to understand the life insurance aspect of it. The company, when you give them $1 and they promise a death benefit of $100 if you die tomorrow, who took the risk between you and them? You gave them one, they owe you 100. They took the risk, right? Not you. You only gave them $1. Same thing with your phone insurance. It's the same thing with your car insurance. You put in $1 and they have to pay out if there's a loss. They take the risk. So they are going to judge your weight. They're going to judge your age and things like that. But remember, there's other ways around it. And it's normally with family members and business partners. So I see that Nancy's pulling this together with her son. Exactly right. So I have 3 children. I'm in the underwriting process for my baby right now for his very first banking policy. He is 1 next week. And so your question, what process for transferring it to our son when the time comes? So think about that in terms of your estate, right? So a lot of people transfer things, you know, you can transfer at any time. So let me make sure you also understand there's 3 individuals when it comes to your banking policies. One is the body, the insured. Someone's got it there to have a heart beating. Another one is the owner, right? We've talked about the owner. That's normally us. We're the ones who want to be bankers with it. And then there's the beneficiary. So there's 3 entities. They have to be there, you know, basically. But 2 of those entities can change every day of the week. Which 2 can change? The owner and the beneficiary. The body can't change. You have to put it on somebody's body. But the owner and the beneficiary can change all day. So you can change it. You know, if your kids are acting a fool, then take them off the beneficiary list, right? That's always the joke, right? If you don't want to give it to your church anymore, you start going, you know, you switch from Catholic to Baptist, no problem. Just change the entity that's the beneficiary. No big deal. So the process is not difficult. You probably need to think through that, Nancy, with your actual attorney, your family, you know, but it's a very simple on the insurance company side. It's literally 2 papers, you know, sign the paper and transfer the ownership so they know who owns it. That's simple, you know, that's almost done over the phone. So it's not complicated on the insurance company side. You just want to make sure your estate and, you know, whatever you're doing with your money, with your family and business and friends is, you know, up to par with how you want to leave your legacy. Good question.
All right. Anybody? I know there's a few. Oh, here we go. Is there an average age where you have noticed it becomes difficult to purchase? I assume you mean be approved. And then have you noticed issues getting coverage for bariatric patients?
I might have to throw this one on Caleb. So part of it is simple because the average age where you notice becomes difficult is it depends on your insurance company. So you'll probably also notice that between Chris, Steve, and me, Caleb, we're not out here promoting one specific company. You've never heard us say, you got to go with MetLife, you know, all those Snoopy commercials from back in the day, because we want you to understand the process of banking. And you'll win if things are set up right with the right kind of company. But there's actually, we broker deals probably between us. We probably broker deals between about 5 to 7 different companies. So, so first off, make sure you guys understand that we're not here, you know, really as undercover agents promoting one specific company. And a lot of those, yeah.
JDew, I'll add to that real fast, just to give you guys an example. I had someone from our Money Multiplier team contact me earlier this morning just to let me know, hey, I ran this policy design through 3 separate companies and I found out this company, it was the best for them. It was the best plan. The design came out back the best. Do you mind if I use that company? It's a company we don't use all that often, but because it came back with the absolute best design, I said, absolutely, because we do this. Again, we do this specifically for each individual, and every person on this call right now is different. Every person in the world's different. Different ages, different health, different you know, funding amounts, different everything, goals. So we designed this specifically for you. So that's a great point, JDew, that, you know, there's a bunch of different companies out there, and you know, it just varies for sure.
Yeah, yeah. So average age, when you start getting beyond 65 years old, some of your numbers may change to be less favorable. So there's a lot of companies we use at the 70 mark. Things are going to definitely change. So that's when we are going to advise you or work with you and suggest, hey, are there other people in your family? If you are 70 and the missus is 62, maybe we'll, you know, go for the missus for this policy that you may still own, but, you know, because the age is a factor. Age is a factor.
And insurance companies are the only companies that can legally discriminate.
Right. Yeah, exactly.
They like
So it's a
women
big
better
deal.
than
Yeah.
men because
They
you guys
do.
will live longer.
Yeah, women, they do. So far, women live longer, right? But with all these women stuck at home this year with their kids and grandkids, I don't know how you guys are going to do it. You may not. Yeah, because I'm dying early. If I can do anything, if I can pick, 2020 is the year I'm going, because this has been wild. I have 3 young children. So yeah, so Caleb, exactly right. So 65, 70 is when things are going to start to shift.
I also want to point out, John, the fact that you're still living in New York, that's the problem.
Oh, yeah.
I'm trying to get you and Chris to leave, but yeah, New York.
Listen, I'll agree with that 100% because I just got back, like I was in Lake Powell, which is Utah, and things are totally different there. It's like everybody on that trip that I was around, none of them are reacting the way that New York is. And I talked to them explicitly about their state's rules and everything else. And why we stay in New York, sometimes I got to ask myself.
At least California has nice weather. New York,
Right.
you get the California taxes and politics.
Yeah. So
crappy
what's
weather.
crazy is there are a few things in politics, if you did not catch on to what Caleb said, that affect insurance. Insurance is regulated per state, okay? Now, you
Yes.
probably know that. You've not thought about it for banking, but you probably already knew that. Insurance is regulated per state, and some of our favorite metropolises that have made this country great and diverse make it suck for banking, okay? So New York is the worst. California is the second worst. And now this is coming from a guy. So we're talking to a couple, NY guys up here, Buffalo area. I moved from California to South Carolina. So you can't throw darts at us, right? We got New York guys. We got California people on here. You know, the Lakers are boom, Western Conference Finals. Let's go. But for a lot of things that they have chosen to do in regulatory practice and policy, potentially political policy, it does not help for banking.
Right. All right. Yeah. And somebody actually had commented on that earlier. Why is New York a pain to get approved? Been trying since May. So I think it's
It just comes down to their rules. They have too many rules, and the underwriting, it's not Mass Mutual, it's New York State rules. They throw in so much stuff regarding assets and regarding income. And you could only basically take a plan and put X amount of dollars in based on income and assets. So one of the things I always tell people is when you're doing the financial questionnaire, basically kind of like look at what your highest income is, not your net, and give them that, because that'll certainly get you a much better policy and allow you to put more money into it. And one other thing I want to talk about is the bariatric surgery. I've kind of, been working with Duck and Duck V. For many of you that know, he's a world-renowned bariatric surgeon. But Duck V, brought this up, and he says, how long after bariatric surgery does one have to wait before they'll get approved? And the answer is pretty much any time. Really, the answer is 1 year. But after 6 months, if we do it with a company like American United Life, we can probably get it pushed through. But yeah, it's tough. Anything, less than a year after the surgery, the insurance company is going to really pick it apart, because they want to make sure that, the surgery is a success, and they want to make sure that it's going to stick. So that's what I could say about that. But we are kind of getting more and more banking policies approved from patients of the bariatric surgery. And honestly, it's looked at as very favorable, just not right after you have the surgery.
okay. Great.
So one thing that I'll bring up, I can always talk. Well, all of us can talk. Don't think it's the JDew show at all. I'm glad to be here, but well, I went with one of the things that we do. If you want to see, so Chris has a presentation. Many of you apparently have seen it. Obviously, you're money school people, and well, I do the same thing. We have a very 50% of what we're trying to share with you is very, very similar, because we really like to educate the whole person and help you understand that what financing is, big deal, and how you accumulate the money to buy stuff. The most important thing you got to figure out over the course of your life, especially those of you who are rebel bankers, investors, and what you do, is how do you get the money to do stuff? And what we propose to you, and what we all think, as much as we try to be diplomatic on venues like this, we generally propose your baseline fundamental denominator needs to be a whole life banking product. That's what you need, built for cash. That's what you should start with. And we try to help convince you that through education. All of us do it. And so when we get to that point, a lot of folks, they have to be kind of like, so I'm a church guy, right? So you have to get people like lost before you can get them saved. You guys remember that from Sunday school? So we have to help people understand that they're missing out because they've got their money locked up in other places in banks, and they're paying third-party lenders with debts and all this mess. So we want to help you understand that you can control the financing in your life, and we have found the best way to do that. So we're going to show you what it is. We do it ourselves. Remember that. We do it ourselves, all of us who are on this call. And what happens then is a lot of people get caught up in interest rates. They see money growing. They see things being able to be used. But why don't I throw it over to, I'm going to ask a question to Caleb, because I kind of had a follow-up lunch with a buddy of mine I've known since high school, showed him the deal, as I might say, 2 weeks ago. And I could tell his questions were in this game of, well, if you don't have all your money, like you told Claude, if you don't have all your money in the beginning, like, am I really just playing a game of interest rates where I could go put money elsewhere? And instead of making, you guys say 4% a lot, you say 4%, you say 5%, you say 4% plus dividends. So what if I can go make 10 in a real estate deal? Shouldn't I just do real estate? Is it a question of interest rates?
That's a great question. That's something that comes up quite a bit. I will go onto my YouTube and paste a video after this, and it's essentially showing that interest rates don't matter when we're talking about the individual deal. Because when someone like says that's an entrepreneur, real estate investor, whatever, like can get a better rate of return than life insurance. I hope so. Because if you're in business and not getting a greater rate of return than 4%, you're not in a very good business. If you're doing real estate and not getting a greater rate of return than 4 or 5%, you probably shouldn't be doing that either. And so that is definitely a question with people that are they just don't understand the and component. They don't understand the leverage component. If you're going to use this for investing, what I'm more focused on is if it costs you 5%, if it costs you 4.5% to access capital from the insurance company, then you want to make sure that your activity, if you're doing it for investment purposes, realizes a greater rate of return than that. If it wouldn't make sense to borrow at 5 to earn 3, that wouldn't make a ton of sense. But if you borrow at 5 and earn 7, that's a 40% rate of return. That's the power of leverage. It's not that this thing outperformed your boring old life insurance. It's that the boring old life insurance is the economic engine that's going to continue to run, give you access to capital, and continue to grow your money. That's the power of controlled compounding. That's what I read about in my book. That's the power of secured leverage. So that's how I had the conversation. Like I said, I have a video that I actually go into the math for some of you guys that like to see the numbers, and I break down number one. Life insurance, when you add fees, taxes, and all that term insurance, you have to earn 7 to 8% just to compete with the long-term growth of it. And then when you realize that you can borrow against and do other things, you really can't compete with it. And that's where we have to shift from, this is not better than real estate. This is just an and component. And I know, Chris, you and I have talked quite a bit about that.
Yeah, so I was saying, so I want to make sure everybody heard. I think you may have misspoken there really quickly. So if you've got 7% in a rate of return, correct me if I'm wrong, Caleb, 7% in a rate of return on doing some deal, then you have to worry about taxes, withdrawal fees, and things like that to compete with something like life insurance that doesn't have the taxes,
so
the fees.
What did I say that was wrong?
I think that you said that life insurance, you made it sound like life insurance is the 7% with the taxes.
So let me rephrase. So life insurance gets you a long-term internal rate of return. But that rate of return is tax-free. That rate of return you would have to have penalty, or not penalties, but like fees associated with that if it was in another account. And a lot of times people talk about buy term and invest the difference. What I'm saying is, if you just compare life insurance to an investment that gives you savings like control, you will incur other costs like fees and taxes. And that makes the 4% in life insurance a lot higher because you have to factor in the taxes.
So 100%. Yeah.
Yes. So thank you for making that clarify. And I'll put the YouTube video because, again, if you guys understand this, you're going to be a massive believer for what we do.
Oh, yeah. So the other thing that I was going to say about what tax, is that you've got to understand the opportunity cost. If you put, when we're talking about building something with life insurance and building the access to capital and utilizing it, is that we're not using the word investment when we're doing that. We're not, investment has implications, and the implications is a long-term hold on your money. Meanwhile, Chris is out here telling you, hey, get your money within 30 days, immediately. Well, that's not a long-term hold. So the word investment doesn't quite fit there. And then second, investment implies a risk. No matter what you're doing, even in real estate, which these guys are pros at, there could be risk factors. And we're not talking about risk factors. They just don't exist with life insurance. So you've also got to realize, so when folks come back to us, I know that they do it with you, Caleb, just like they do it with me. When they come back to us to get questions answered or refresh their brain on what we told them last week or last month, they start using terms that we never used because they're used to hearing the terms investment and risk and retirement. We go, those are good English words. We believe in those words, but did we use those words when we said it to you? You remember that. So I see some of you nodding your head. When you saw me do a presentation, if you're ever in the cash compound watching, I'm not using the words in terms of the product or process of banking. I'm not saying the word retirement. I'm not saying
JDew.
long-term investment.
JDew, real fast.
Suggesting risk. I'm not suggesting taxes. And if you're comparing apples to apples, you've got to realize that the things that you are doing, qualified plans especially, and some of your investments, all of those things are factors. They're risks. And you got your money locked up for 10 years, 20 years, like I didn't say those things. So really, and there's so much education that has to go into it. And some people pick it up in the first hit, but you got to make sure that you're dealing apples with apples. And that's what really we're trying to help you guys understand in the early 1, 2, 3 year stages of you getting started, which most of you are in that stage, because people like, hey man, remember, pump the brakes. You use the word investment and retirement a bunch when you're talking to me. I'm not using those terms. Let me make sure we define what we mean by that and what you mean by that, and realize that, I didn't say those things in terms of general process of your policy contracts.
I think
all right,
one thing
Caleb's
I want to
out
bring
here
up,
just finding links like crazy. You guys got a lot of homework to do, right? I'm talking. He gets to do all the follow-up. But I think a lot of you are connected to the cash compound anyway. Stay on. I think we're going for another hour. We can always talk. I'm sure Chris has things to jump in and say. But if you're not connected to our platform, our learning platform, the cash compound, we do have access for you tonight. So stick around. We'll give you that as well. So since a lot of you know about us or probably have heard about us because of Chris and Steven, it's fine that Caleb jumps in with all his links, because I think everybody may know who I am already. So Caleb better get those links in.
Yeah.
Hey, can you hear me? Yeah. So one of the things I love that they both talked about, and it's a big misconception about, privatized banking.
Chris,
and
are you talking?
banking
I
concept.
can't hear you. I'm sorry.
Shoot.
Yeah. Jeremiah, your mic cut out for, Chris, you're good. JDew, your mic cut out for a minute, so you might want to plug your little thing in better. Go ahead, Chris.
Okay. So you can hear me?
Yeah.
Okay. So yeah, one of the things that Caleb and Jeremiah were talking about is, I think a huge misconception is everybody wants to make this about, the magic bullet, if you will, the whole life policy. They want to think that the whole life's the whole purpose. And it's really, the whole life is just a machine. It's just the most efficient machine we can use to move money. There isn't another machine out there. And trust me, I've looked, I've gone to brokerages. There's not one other machine out there in the entire financial universe that will pay you interest on your money and allow you to take that money back out. And the other thing I think, and I want Caleb to really hit on this because his book, The And Asset, really talks about this, is the power of uninterrupted compound interest. You see, the thing a lot of people don't understand is they get so fixated on this 4% guarantee and this 5% simple interest that the insurance company charges on this loan. And they think, well, I must be losing money. This doesn't make sense. You're definitely missing the point, because the interest paid and the dividends, I'm not even talking about the dividend, but the interest paid on your money when it sits there every year is compounding. If you did $100 and it earned 4%, you have 104. So next year it's compounding on 104. So you can see it's going to keep going up. The interest the insurance company charges you is simple interest, meaning if it was 5% on 100, it's $5. And the next year it's $5. And the next year it's $5. And the insurance company's not going to send you a bill every month to pay this interest. They're not. You're going to get a statement once a year that's going to have the interest due to the insurance company, and you should pay it. I pay it, and I take the tax write-off every year. So don't make this about the whole life. This is a process. And again, I'm going to kind of, because I'm worried about the loudspeaker, but Caleb, if you could talk about that process and the whole system and how it works is really about the movement of money while your money continuously earns that interest. So if you could just elaborate on that a little bit.
I think one of the most powerful things to understand is opportunity cost. And one of the things that I talk about is C squared. And C squared is a function of a long-term growth of a dollar, but then also the value of controlling that dollar. So when we talked about the opportunity cost, and I'm like a broken record, but it's like every time you lose a dollar, you don't just lose that dollar, but you lose what that dollar could have earned you the rest of your life. Like we have to be freakish with our obsession of not losing money. And so I talked to two kids that I was mentoring, and we went out to lunch, and I paid for their lunch. It was like $64. And they were like, Caleb, thank you so much for lunch. And we know this costs you a lot more than $64. And so being the nerd that I am, we got my financial calculator out, and we calculated over my lifetime what that one lunch did, like the actual cost over my lifetime. And just a simple calculation over 60 years at, some interest rate, I realized that one decision cost me almost $4,000. Why? Because my $64 was never able to earn for me ever again. So the mistake that people make in compound growth is, first, number one, they don't fund the system. Number two, they get interruptions, whether it's taxes, losses, or fees. And number three, they don't commit to a lifetime process. The number three, what's crazy about number three is most gurus out there, they're teaching people about retirement planning. They're telling you to kill the goose that's laying the golden egg. Like majority of people's retirement plan is compound your money and then take it out. Why in the world did you kill the goose that's laying the golden egg? So life insurance is just an economic engine. It's just a tool, like Chris said, and it's an efficient tool to allow your money to grow the rest of your life. If all you do is play a lifetime game versus a retirement game, you will win. And on top of that, it gives you the best way to use capital that won't hurt your future and your legacy. And I'm telling you guys, like that is extremely powerful, extremely powerful. So hopefully that registered.
Yeah. And Caleb, I get the question a lot, how long do I have to pay into this? Can I stop putting money into this policy, down the road in 10 years or 15 or whatever it is? And we're not understanding, like you're saying, this is, that compounding aspect, that's when it starts kicking in. And that's when you start seeing those crazy cash on cash returns that are just, they blow your mind from an investor standpoint, a financial advisor standpoint. And so so it's just wrapping that all together, right? I mean, that's kind of what you're talking about, right?
It's a great question when you see life insurance as an investment. Then it's like, why would I want to keep paying in? That doesn't make any sense. If you understand that everything revolves around cash flow, then it's a different conversation. And so great question and great, like I think we give similar answers. It's like, you don't have to pay in. You really don't. But if you could put $1 into a system that could kick out $3, how about this? I'll pay your premiums and you transfer the policy over to me, and I'll do that gladly.
I think that's a great question, and the great way Caleb put it. So I'll talk about it in terms of this. So, and it's something, like I said, what I do. Caleb mentioned that he's a numbers nerd, and you should see this guy, because I'm sure he's been called Doogie Howser 100 times in his life, and he's not even old enough to know who the dude is, right? I'm just old enough to know. However, I'm the vernacular guy, right? Vernacular is still a big word, but all it means is this is how regular people talk. And Chris is walking through the airport right now, and he sees a soda machine, a drink machine. I always like to talk about this. And it says $1. And you can pick 10 different sodas. And he puts it, now I don't know if it's soda, it might be pop, wherever you are. I don't know, jump in the chat. Tell me which word I'm using wrong. Pepsi, Coke, I don't know. Okay, so you put $1 in the machine. And in year one, and a lot of the examples that we give you guys, let's say that you can utilize about 50% of your money in a loan. Okay, is that fair to say? If you've seen Chris talk about it, 50%, it can go up, it can go down, but 50%. So you put $1 in, you hit your soda, it comes out, 50 cents and change comes out. But it said that it cost $1. So you just assume that Jill is looking at me, she just assume that the machine is broken, right? It gave you 50 cents. You put in 1 George Washington, 2 quarters came out. But you took it and you took your drink. Well, you come back. Next trip in that airport, you put $1 in. It says $1 on there, and it kicks out, let's say, 65 cents. And your drink comes out. You're like, this machine is crazy. It's still broken. They never fixed it. That's what you're thinking, right? And then you come back for your next trip on your way home, round trip. You put in $1, 90 cents comes back out, but the soda comes back out as well. And then the fourth time, you put in $1, fourth trip through this airport, you put in $1, 4 quarters come out of the change machine. It's not your $1. You put in a bill, 4 quarters come out. It was their money. And your drink came out. So when Jill goes home, she gets home to the family, she tells the hubs or who her loved ones are, she's excited. And Jill, jump in, Jill. Can you do it for me for 1 second? Jill, what are you excited about? You put in $1 because it said $1. $1 and change came back and a soda. When you go home to the hubs, what do you tell him you're most excited about? Which part that came out of the machine?
I'm excited about it all.
The $1 came out. You knew it was going to give the soda, right? And that's not what you're talking about. It's about the $1. And see, that's exactly what Caleb is saying right here. What happens is your money's inside the machine safe and sound. And every time you go back, the $1 keeps getting bigger. Your husband tells you, oh, Jill, you didn't know about these magical machines at the airport? If you go back a 5th time, it knows it's you. I don't know. It scans your face. You put in $1, it's going to kick out $1.05 this time. So my question is, what percentage of Jill's money? She's got more than $5. She's got a whole wallet. She's traveling all over the world. She's got plenty of money. She does deals. She does investments. She's got money in the car. She's got money in the couch cushion. She's got money in the bank. If you know that this is a guaranteed process and every time you put in $1, the change keeps getting bigger, what percentage of your money, Jill, do you want to put in the machine?
As much as I can.
There you go. That's very simple. See, lots of people miss that. So I kind of break it down for people like that. So, you know, maybe they don't drink soda. I don't know. But I think it's a pretty worthy way to explain kind of what's happening for people from time to time. So, you know, you're able to save your money and spend. We tell people this all the time. We're going to teach you how to save and spend money at the same time. And by the end of our conversation, we help them understand, see, you're saving your money and you're spending the insurance company's money. They keep giving you money based off everything you've ever put in their machine. So even though you're going to put in 1 over and over and over, they're going to end up giving you way more than 1 over the course of time. So the question is, just like Caleb was saying here is, and the retirement question that Stephen was saying, I'll circle back now, is which trip to the airport are you going to decide not to put $1 in? Which trip do you decide, you know, I'm not going to put any dollars in more? Now, you know, the 100th time you put in $1, you know they're going to give you, you put in 1, they're going to give you $5, $10, $11. So when do you decide to stop?
Never.
Yeah, never. You're like, well, I'm not going to stop. That doesn't make any sense. Now you can stop. That's exactly what Caleb was saying. You can stop. There are certain reasons in your life, potentially about your income, that you should stop. It's totally fine. But why are you asking me day one, hey, can I stop? Like, what? Do you not understand what's happening? Why are you trying to stop? We just assume at the beginning you don't get it. That's the thing. We're going to let you stop. We're going to teach you ways to actually call the company and say, hey, let me elect to stop. I'm going to stop putting it in. I don't have my business anymore. I'm not making income. I'm old. Whatever. It's totally fine. But if you're asking us day one, when can I stop? We're like, I don't think you understand these magic soda machines. I'm telling you, the Buffalo Airport is a wild place. So go get your drinks over there.
Yeah, definitely. I just tell people they can never stop because that's not financially smart at all. So forget it. You're in. No, that's a great way to great example there, JDew. I really like that analogy. Actually, I'll probably use that. All right, I have a couple questions coming in. I'm gonna read them to you guys. All right. So this one was, when will we put in what I call my sinking fund? Money I use during the year for things that come up, like car registration, dog tags, car insurance, tree trimming, termite inspections. I put about $1,000 a month away for these things. So I guess they're asking, are they able to use or fund those kinds of expenses in their everyday life with the policy?
I'll let Jeremiah take this one. I may have a conflicting answer. So I'll let Jeremiah take this one.
Mute. JDew, mute.
I apologize. Okay, well, I said okay, let's get in here and argue about something. Sounds good. Caleb wants to, let's just fight to the death. Okay, you guys got to understand my personality here. So I'm probably not like your average financial coach, am I? Okay, so I apologize.
No, you're not.
So because I want you to make money and I'm going to show you what I actually do, right? We're a little bit different, all of us. We're going to actually show you, hey, we do this, I do this. This is my suggestion. Let me show you what I've done and how I've helped other people. It's completely different. But I apologize, Stephen. Did someone send that to you specifically? Can you repeat it? I don't see it.
Somebody had emailed it to Chris. Let me just, yeah, I'll put it on the chat box so you can kind of see it.
Okay, great.
Hang on here.
Yeah, so basically what he's asking is he wants to know, because it looks like he's going to do like what Brent does, where he's going to pay all of his expenses and, he'll probably use credit cards, but he wants to create a sinking fund. So once a year, he wants to probably, and correct me if I'm wrong with a chat, but wants to take money out once or, quarterly and then put the money aside to pay his bills or pay his credit card off or pay his average expenses. I'm pretty sure that's the question. Lynette's got a very similar question too. So.
Okay.
I'll read that one. Question 2 that I sent in. We took out a HELOC, just have to money in hand. Chris mentioned in one of the talks that we should move that money around. And even though I will have a monthly bill, should I put some of it in a second banking system and use it to pay the monthly payment to the bank?
Okay. So there's a lot of things that can go in there. And the thing is, I'm interested to hear Caleb. So I won't talk on this long, actually, because I'll say a couple things. Number one, kind of the philosophy. So the reason I talk about something like a soda machine is because I want you to understand the philosophy. Okay. I think like when I talked to Jill about that, do you get how much you'd want to put in? Do you understand the philosophy? Because then you can decide what you're going to do specifically in practice. And it may be a little bit different than my opinion. Okay. So that is totally fine. So my personal approach is to, and I'm just going to say my personal approach here, and then I'll turn things over. I've been talking long enough anyway. My personal approach to this, because of the way I build my policies now, build my banking systems, 1, and 2, my age, what my family needs, and cash flow. My goal is to get as much money in policies in the early years as I can. I assume that I'll live for probably another 40 plus years. That's a long time to have money compounding the way we're talking about. So what I'm going to try to do is I'm going to try to overcorrect the fact that when I was 10 years old, I didn't have these policies building for me, and I'm going to put as much money as I can inside the policies so I have more options to do later on in life. And the question that Lynette is asking probably has something to do, and in her world probably has something to do with like her rates and her payback schedule, which of course is custom. So that's what my brother deals with. Okay, I get to tell the jokes. He's going to help you with some of that stuff. And then the other one, sinking fund. I had a question when I sent in. When would we put in what I
Jeremiah, they're both the same person that asked the questions. So,
okay.
Lynette asked both. One about the sinking fund, because really she's just looking at basically how to use this, for different things, whether it's, paying regular expenses, as the plan becomes more mature, or just as that sinking fund side. So it's really the same question.
Oh, gotcha. Okay. So I think I understand a little bit better. Okay. So here's the thing that, the thing that we try to help people understand is it, and this is where it's nuanced because people need to understand a few things. You've seen Chris and us potentially talk about paying off your debt, right? paying off your debt with things. And you're going to have revolving debts, sinking fund. I think it took me a second to understand what you meant by that. That are not debts. Like you're always going to have groceries, you're always going to have gas to buy and car insurance and stuff like that, right? So let's assume you always have that tree trimming, like the trees are always going to grow. So, what we're going to do is, that's really when we're going to suggest that you be able to practice what a bank does. And when you take loans from your policies, we think it best and smart in 99% of cases to pay them back with interest. And that's why you want to be connected to the money school, because they're going to teach you how to use this thing as a banking system and get more money back in with paid up additions and things like that than you're expending on your regular occurrence of bills month to month. So we're always going to have those bills. I have them as well. Don't think that you're special. We all have those bills, but we're also going to remind you, what would a bank do? You are the bank. You own the bank. You can do whatever. Some of it actually depends on your age, because if you're like, well, hey, I'm going to die in 2 years because I'm 95 years old. If that's where you are, Lynette, I'm going to say some different things like, hey, Lynette, don't worry about paying it back, girl. Do your thing. Go to Disney World. But anyway, so that can be nuanced. That can be complicated. Let's turn it over to Caleb. Caleb, what would you say to that, just based on her question?
Can I draw for a second? I think, Steven, I need permission.
Yeah.
This is a very, very good question. I want to give Chris the ability to speak after I'm done, because last thing I want to do is confuse more people, but this is a question that I had. And,
all right, try that.
Okay, can you guys see my screen?
Yes.
Okay. So here's the thing is, okay, so when Nelson Nash talks about your income meeting your, policy, like your premiums, that's not going to happen overnight. And so I really believe that infinite banking, the and asset, whatever you want to call it, one of the big benefits is it allows you to triple, if not like quadruple the amount of money that you're able to save. So I'm a huge fan of saving a lot of money. I save over 6 figures a year to my future in the accounts like this. So don't get me wrong. Like, I'm a big, big fan of saving, but from an analytical perspective, this is how I think about it is IBC. And of course my pen's not working. Let's see. Well, we'll see if this even works. May not be working. Okay, here we go. Yay. Okay, so from a money perspective, your money can either go two places. It can be saved or it can be consumed. And so what most of America does is they consume 95 to 100% of their money and they save 5%. The reason why they only save 5% is that money's locked up and they need to live off of most of their money. What we try to teach people how to do is how do you save 30% or more? And what if you could put it in a place that will grow the rest of your life? And then all the 70% represents all the consumption. This could be taxes. This could be groceries. This could be tithing. This could be all kinds of stuff. This money's gone forever. And so you have to be able to, like when people say, can I afford this car or whatever, I'm a big fan of not just looking what's in the policy over here, but looking, can you pay this car back with cash flow? So if you buy something like an asset and you buy it from your policy, then what you can do is you can say, does this asset going to pay for itself? Is this a good investment? But if you're going to buy something like an expense or a car or all this, you have to make sure that your monthly cash flow, whatever this is, if it's 40% or it's 80%, can pay back the insurance company. And I think the reason Nelson talks about interest is because of human behavior. If you're going to buy a liability, you're going to buy an expense, you need to be able to pay this back. So I just find a lot of people are confused about this because at the end of the day, you can't be saving 100% of your income right away, because then it's like, where's the cash flow going to be to, how are you going to pay that back? You always have to be thinking how you're going to pay it back. You're going to pay it back by making more money through your cash flow or through assets. Now, eventually, When you have years of reserves, it's a totally different story because now you have built up capital that you can do certain things with. But I want people to understand the benefit of this is to save. I want people to save 3 to 4 times more than they are now. You can do that because of the system. And so I don't know if that's confused you guys more, or if it makes sense. But for me, it registered to be like, wow, we can help people save so much more money through the system because we can teach people how to use it and then pay it back. But it's still okay to have some cash flow that's not being funded the policy.
I love it, Caleb. Thank you for that, because a lot of people miss. That's why we talk about cracking the code to cash flow. You still need to think about your cash flow, understand your cash flow, because we're always going to have sinking fund. We're always going to have bills that we pay all the time. And it does, he mentioned there for a second that it's important to think about where you are in life. So I'm 36, I have 3 kids. I'm in the first 5 years of all of my policies. I do have several. If you're 92 and you have a huge amount of cash flow, I mean, because you have like cash values are super high, even if you don't have income, you're going to potentially answer that question way differently, because I'm going to tell you, hey, you need to go for it. Spend your money and have nothing left. Just go crazy. Don't even pay it back. So you do need to understand some of that.
And the reason why Jeremiah says that is the death benefit will pay off that existing loan. And it's like, it's powerful. And so that's another thing. It's like, I want people to understand this is not like some magical bullet. It's the insurance companies are hedging both your chance of loss, your mortality, and interest rates. They're the only institutions out there that hedge both mortality and interest rate. And so that allows them to be the only institution that guarantees you a loan without you coming up with a special credit or requiring you to pay it back, because they know that they have a collateral on your death, which is not morbid. It's why we want to be in a mutual beneficial relationship with a company that we have part ownership in.
Yeah.
So it really is amazing when you understand the fundamentals.
Yeah, we tell people that all the time. So on day one, remember, day one, if you say you're going to put in $1 to this insurance company's program, whole life policy, Kevin, whole life from mutual companies that participate in the dividends, dividend paying, however you may hear that, because there's jargon going on here. You give them $1 day one, they promise to pay your loved ones, your charity, your church, your friends, $100. It's the easy way, easy math. You give them $1, they promise to pay $100 if you die tomorrow. Simple math. Let's think about that. So here's the question. Number one, who took the risk? I asked that earlier. If you gave them $1 and they owe you or / your family $100, who took the risk? You or them? Them. You gave them $1. They took the risk. Secondly, who owes who money? Same question, different way to ask it. They owe you money. That's what Caleb was talking about. Remember, your loans are actually stuff that they promise to pay you anyway. They owe you money. They owe your family money. You are never going to catch that number that they owe you. You're not going to catch it. They've done the math. They'll give you cash value loans that are never going to catch it. And you have to literally live to be 121 years old in 99% of cases to catch it. You'll never catch it. They owe you money. Have confidence in that. Sleep well at night. Let that help you think through it.
Kevin, do you want to get on and ask your question? I want to clarify. It seems like it's a mystery on the exact ROI. Yeah. Do you want? Yeah.
Yeah, I think he's saying yeah. He's saying yeah. Go ahead.
Hey, how are you guys? Thank you. I appreciate it. Yeah, so it's really just right. Your initial investment in the stock market, right? Average 6 to 7%. You know, and again, cash flow with your assets, it varies within real estate. I truly believe that. But now when I went into the whole life, a little bit of the information, when I started to dive in, I really couldn't get like an average of what returns looked like.
Yep. So can I go, they entrusted me with inviting me on here. So number one, my video by term invested difference goes into the math, which is really interesting. I'm going to do that for you guys really quick. So let's see what I have on. This is a calculator that I've inputted some life insurance. Nope, not that. Okay. So you take like this is a policy. This is for someone that puts in 100,000. So obviously this can be scaled down to 10,000, 5,000, 20,000. But there's something over here called the internal rate of return, IRR. That's the actual rate of return. So I totally hear you. This is it can be very confusing. It can be frustrating. It could be like, hey, these companies are saying they give a dividend of this, but it's like that doesn't make any sense. The internal rate of return is the actual growth rate. This is the actual, like if you put money into an alternative account, like in year 10, this internal rate of return is 1.48%. That means every single year your policy grew 1.48% tax-free, and it's growing, and you had capital. This is your access to capital that you could use to borrow against it. Now, you can see that in year 20, in this case, the policy is at 3.57%. What savings account right now today gives you a 3.5% every single year, and then we have to add on taxes, losses, fees. So that's just the pure growth. Over 30 years, the actual growth rate in this policy is over 4%. And again, it's 4.25%. That means every single year you'd have to put your money in a place that gives you access to capital like a savings account that gets you more than 4%. And we're not even including all the tax benefits and fees and all this stuff. So that's early on, we talk about internal growth of the policy. You have to look at the actual growth, and then you have to factor in all the other factors. When we're looking at other investment opportunities, then I get what's called a rate calculator. And I say, okay, if we have a rate calculator, let's go interest rate calculator. And we have, because when you borrow money, you're not borrowing your own money. When you borrow money, you're not borrowing your own money. You're borrowing the insurance company's money, and your money's being collateralized. Everyone's got to understand that, because a lot of people teach like you're borrowing your own money, you're banking from yourself. That's not true. Life insurance just gives you a guaranteed contract that gives you the ability to put your money up as collateral and have it continue to grow. That's why your money continues to grow even when you borrow against it. That's why rates don't really matter, because yes, you're getting that 4%, that 4+ amazing percent for the rest of your life, and you have access to capital. And now let's say you have $100,000 in a policy, and you want to borrow against that, let's say 100,000 to make math simple. Well, what's 5% of 100,000? That's $5,000. So it costs you $5,000 to control 100. In my book, I talk about $5,000 is the control cost of controlling $100 or $100,000. Does that make sense? Okay. So it costs you $5,000 to control $100,000 of the insurance company's money while your money's continuing to grow. So it costs you $5,000. And now with $100,000, you go out and make an investment. And let's say you make a 12% rate of return. Okay. Well, now what?
It's insane. It seems like it just, levels up, as even if you're building an asset too, that's providing you cash flow with that 100,000 that you just borrowed for 5,000 and getting a 12%. That's insane.
So right there, and this is not math. This is just math, but that $5,000 that's the cost. That when people are like, you have to borrow to use your own money. No, because you're not using your money. Your money's continuing to grow. You get to borrow someone else's money guaranteed at 5%. This is just an example. Some are higher, some are lower. And then you go buy an investment property. Do you take on risk? Yes. But let's just say if you were invested if that 100,000 was yours, your money's no longer growing, but you get that $12,000. So that's 12% rate of return. But since you're now becoming the banker, you're using velocity, you're using leverage. Now you took something and got 140% over here, all while your money is continuing to grow, protected, tax-free, the rest of your life.
Right. And
we're not even talking about the death benefit. I just interviewed Wade Fowle on my podcast, who talks about life insurance and retirement planning. like this truly is the key that unlocks other things. And so hopefully the math makes sense. It's like activity, but then the internal growth rate. And you don't have to choose between one or the other.
And that's not even touching your 70% of what you would suggest that would be an ideal plan of living on and throwing.
Yeah.
You know what I'm saying? Throwing that 30.
That doesn't count all the money that you're saving. See, our plain and simple goal is to help people save more money because we have a savings crisis on our hands. So if we can triple your savings, and by the way, everyone on this call can, because if I can show you how to control that money throughout your life, you can now save more money. As an entrepreneur, there's no way in the world, you guys, I would save money if I couldn't have access to that. So I would just be forced to put my money in a savings account. I would do that because I value control over compounding, but I don't need to choose between control and over compounding. I can have both. That's why I came up with the phrase controlled compounding, because I'm bad at English.
Yeah, no, that's great. And Kevin, that brings up the kind of the next subject I wanted to hit on for the last 30 minutes here of the call is, those of you that don't have a policy yet or that are on the fence or whatever the case is, why? What stopped you so far? Why haven't you moved into applications? Why haven't you started your first policy? What's holding you back? Let's hear some of that stuff.
I just signed on mine this week. I'm Jill.
Hey, Jill.
But so now my goal is I'm gathering information to give my daughter and son-in-law because they're in their early 30s and they're going to be starting to look at some of these websites and stuff. So.
Wonderful, Jill. Well, congratulations first off. And I'm assuming if you've gone through these guys and you are in the process of getting your first banking system in force, you are going to meet my brother. Maybe have not met him yet. His name is Jonah. So is that the plan?
I got an email from Jonah. I haven't got an appointment yet.
So he's a nice guy. He's not nearly as fun as me. He's like Caleb. He's like, he knows all of his stuff, is super technical, but he's not fun. That's Caleb.
Oh, okay.
So so he's going to customize all your stuff for you. So first off, I would say, for those of you who don't realize, when Steven points you toward getting going, or Chris points you toward getting going, like, answer the emails, check to make sure you got them, because we will customize this stuff for you on the house. It's part of what we do. Okay, so do that.
I did. Thank you.
You're welcome. You're welcome. And then second, so you check in with Steven. If you already have his contact info, don't worry about mine, but also realize that, our video library that we have, Caleb's, as well as what we do, we're good to check in with your family. If you want to do something custom, like with your folks, we can do that. I'm
right. I've given them all the contact information, the YouTube stuff. So
okay, yeah.
Just in fact yesterday. So.
Oh yeah, wonderful. Okay, so I think we had some potentially other questions.
Let's see.
Teresa had a simple one. Teresa.
Before we move on from that, guys, I just want to give everyone one more opportunity. Caleb's got to jump off in about 5 minutes, and then Jeremiah, JDew, and I will wrap things up for the last 20 or so. But if anybody's got anything last minute for Caleb, let's get that out right now.
First off, I do. Caleb has an outstanding message from me, and he hasn't responded to it. So answer my message, sir.
What is it?
I thought we were going to get together. With your guy and Jonah and everything, we were gonna have a
Let's do it. Yeah. Oh yeah. 100%. Let's make that happen. I'm here as a resource, and it's an honor to be here, and I'm committed to continue to pump out information on YouTube and on my podcast. I have a book, because I believe if this is done right, if it has the right mind, if you have the right mindset, it's a huge foundational asset. I don't believe it's the magic bullet. I don't believe it's I think people sell it wrong, but I'm telling you, it's an amazing asset. And if I could be of assistance to any of you guys, I'm here.
Your book is awesome.
Thank you, Jill.
That's great. Yeah, Caleb, thank you for being part of MSTV and Money School. And I know Chris has nothing but, huge, great things to say. So it's a pleasure to meet you as well myself, and look forward to continuing to work with you in the future.
Yeah, man, I would love to connect with you sometime. And Jonah or Jeremiah, sorry. Love you, bro. I appreciate
man.
you.
Don't
And
worry.
tell your brother, that's why I got my mix up. Tell your brother I said hi. And
Mom
guys.
messes us up too. Mom gets us wrong too, so it's all right.
All right, guys.
So one more
Thank
time,
you.
betterwealth.com, grab his book, and yeah, thanks, Caleb. We'll see you soon.
And leave me a review. You would make my day. It's impossible to get people to review books. So that would be awesome.
All right, cool.
All right, guys, take care.
All right, thanks, buddy. All right, cool. So JDew, we do have a couple questions rolling in now. You want to
Okay.
a couple of them?
Of course.
Perfect.
So I think Teresa had the latest one we hadn't chatted about. When you take a loan, do you schedule for prepayment or do you create your own prepayment plan? So for those of you who are connected with the money multiplier system, reminder that Jonah, my brother, is your aftermarket guy who will customize things for you. It's on the house, it's part of it. And he doesn't, he'll get on these things. He acts like he'll tell me he doesn't want to get on them because he's afraid of everyone's questions before they actually get to him in the process. Okay. So Jill is going to chat with him soon, I'm sure. So he sometimes suggests I'll do the front facing stuff. So first off, you are in control. That is one thing that if you haven't figured out, you are completely in control. Who owes who money? The insurance company owes you money. It's a unilateral contract. They owe you money. You don't owe them money. That means you're in charge. It's got your name on it. You own the policies. So you get to pick. Okay, that's the answer. You get to pick on how that works, Teresa. You get to schedule the prepayments. You can do that. You can set it up with the insurance company, have them dip into some bank account every month or every quarter. Whatever you'd want to do, you can call them and tell them, hey, I'd like to make a loan repayment. I'd like to stop my loan repayments because, hey, I found another investment deal to do, whatever. You're in charge, okay? So I just want to make sure you understand that. And my brother will help you with all that. Like he'll give you the number, three-way call with you if you need to, whatever, so we'll help you do it. So that's that one for paying back the loan or anything else. Okay, Rodrigo, my man, understanding the fundamentals of tax benefits, strategizing, how will I use the poly was stopping me from opening one. Understand the fundamentals. Okay, nothing is stopping you. So let me tell you right now, sometimes I forget, like when you guys are ready to go, if you're talking to Steven, if you happen to get through to me or Chris or whoever, when you're ready to go, there are two things that we want to know. Number one, if this is your banking system and you want to pay yourself first, rule number one, Chris will say that a lot. You tell us how much money you'd like to put in your banking system. You give us the number. Okay. Second thing is you give us how often. A lot of our examples, you're going to see annual deposits, right? Those are really premiums. You're going to see annual deposits. You don't have to do annual. You can do monthly. Right? You pay your car insurance monthly sometimes. You pay it annually some years when it's not COVID. Right? You can pay quarterly. You can pay semi-annually. How much and how often? That's the answer. So nothing is stopping you. Remember, I said a little bit earlier, if you see the recording of this, hopefully you'll get that as well, that you don't have an obligation. If you tell me I'd like to start the process and go through application and underwriting, you don't owe me money. You don't have to put Steven's name on any checks. Like you can start that process. We're going to let the insurance company tell us whether or not you qualify, which is based on health, right? This is a life insurance product. So you do have to be alive. Okay. So for those of you who are watching who are dead, I apologize. You cannot, it's an election year, right? So there's dead people who are going to show up in November again, right? I don't know how this works. I've just heard. Right.
Politics out of it.
All right. No politics. I apologize. But you have to be alive. Okay. So I don't know if that means you're Republican, Independent, or Democrat, but you got to be alive. Okay. So I'm just saying. So what's stopping you? I'm not sure. If you have more questions about that, hit me up, hit Steven. You can see in my chat my information if you need it. Michael, I'll just pump right through. Steven, stop me when you want. Yeah. What's the minimum you need to start a policy with $30K can you do monthly payment the next year if you don't have a lump sum? Ooh, great question. And when I say great questions, it means that it's something we haven't brought up yet, or it's really easy to answer. This one's just really easy to answer. Okay. All right. So number one, I will answer the second part. You can change the mode of payment anytime. Jill, Teresa, you can change it. If you told Stephen, hey, let's start $10,000 a year, $100,000 a year, you got to realize that $12,000 annually is the same as $1,000 monthly. You can change it. Doesn't matter. You can change it anytime you want. Okay, so you do also realize, though, the nuance. We've all seen this a million times with our things online. You can pay Netflix $100 1 year, or if you pay them monthly, it ends up being a little more than $100, doesn't it? It ends up being like $110 if you pay it monthly. So it doesn't matter. It's up to you. Most of the answer is based on your preference and cash flow. Don't worry about the fact that they charge me $5 extra if I paid it monthly. But you can change it anytime. You can change it every month. It does not matter. Okay, so remember that. Secondly, so there are some tricks of the trade. If you do have a lump sum, you have an amount of money from an inheritance sitting in a bank account, or from a bonus you got at work or something, and you're trying to figure out how to space that out. So the way I tell people, Stephen may tell people a little bit differently. The way I tell people to think about your money when you get started, pick the number that you want to do forever. Pick the number that you're going to do forever. And the reason that I say that is because that will probably help you pick a lower number than you've got. There's the fam right here, right? It's COVID. We got the kids in the background. There's the missus. There's the baby. Okay. So pick the number that you can do forever, because it will help you with your cash flow. So if you have 30,000 sitting in the bank account, what I would suggest is maybe break that number down to 4,000 a year, 5,000 a year, because you probably think you can. There's reasons for that. We can get into it one-on-one, but you probably are going to be able to budget to do that number every year. And that's what I want you to think about in the beginning. Once again, we've already hinted at you guys, you don't have to pay the number for the rest of your life. But which number, Mitchell, which year do you want to stop paying it? If you put in 4 and in year 10, they give you 5, they give you 6, they give you 7, are you going to tell me, well, I don't want to put in 4? My man, if you put in 4, they'll give you 7. Like, I'll give you 4. Give me the extra, you know? So anyway, if your philosophy is right, if you can see the forest through the trees, you'll get all the numbers right. So my suggestion is pick the number you'll do forever, because it will help you to not do too much. Literally, it'll help you kind of not do too much. Okay. Caleb, yeah, Caleb is a great guy. So while he's gone, I will say that Caleb has, as much as he said, hey, I don't think it's the magic bullet, he's lying. He wrote a book on the magic bullet. Okay. So get the book. Okay. We try to be diplomatic. We try to help people understand. And Caleb is my guy for sure. And I don't get paid to endorse anything about Caleb. We're just friends. We really believe this. And as much as he said, hey, there's things you can do with your money, which he believes, which better wealth will help you do. And other things, because this is the, we just all believe this is the starting line. This is the foundational common denominator. And I got to challenge a little bit. I don't believe it's the magic bullet. My man, he wrote a book on it. Okay. He does believe it's the magic bullet. We all do. Okay. So get it and feast on the information that's going to help you be financially free.
Yeah, absolutely. And JDew, you know, being a magic bullet, absolutely. And you know, the more and more, you know, over the last 14 years being in the real estate investment world and being in the entrepreneurship world and traveling the country, and I've met a lot of really interesting people. And the more people I talk to this, the more people I find out have these policies for themselves, and they just don't share or talk about it much. But it's one of those things that's out there all over the place. And you know, I think maybe it says it's not the magic bullet because it takes it's a great way for savings. It's a great way to put your money. It's safe. It's secure. It's not tied to the stock market. It's guaranteed growth, compounding year after year after year for the entire life, right? But it makes it that much more powerful when you can use it simultaneously to grow your wealth through the money you're taking out of the policy, through the loan, right? So if you're investing that in things like real estate, if you're investing that in things like our private funds that we have, or you doing private lending, or whatever the case might be, you go out and you open a coffee shop or a restaurant or whatever the case might be, right? You're growing your money. Anything above that 5% loan, you're growing your wealth that much more on top of the compounding that's going on top inside the policy, right? So I just want to mention Chris. You guys know his story. He's been doing, he's been a financial planner for 16 years. He's been an entrepreneur almost his whole life. He got into real estate investing, flipped 260 houses, got a show on HGTV called Risky Builder, a pilot episode. And so he's all in, right? And so his world revolves around primarily real estate investing. And people forget, Chris just got into infinite banking, actually marketing and talking and selling it. I don't even know if it's been 2 years. It's been around maybe 2 years, 2.5 if tops, right?
Yeah.
So this is just a little portion of what we do. And all of you that are in MSTV, I don't think a lot of you got here on this call because of infinite banking, because of the money multiplier. You're here because maybe you wanted to learn real estate investing or entrepreneurship or, all these different things that we do with self-directed IRAs and all that. So I did just want to mention real fast before we move on, we do have a virtual workshop coming up next weekend. So what we did is before COVID, we were doing live trainings around the country. So we would fly into a market. We would invite people to a 2 or 3 day workshop in person where me and Chris would spend 2 or 3 days live with you, teaching you. Well, when COVID hit, obviously we started MSTV and we pivoted and made everything virtual. But we've just recently brought back the workshops in a virtual format. So instead of having to fly to your city, we're doing them on Zoom now, and we've done 3 or 4 of them, and they're going really, really, really well. So if you haven't already enrolled, the cool thing is instead of charging $1,500, $1,500, we now charge $197. So $197 investment to spend 3 days with Chris, myself, and we bring in a handful of experts. Was it you, JDew, or your brother that's been on?
Well, I think both of us. I've been on it as
well.
you
guys have both been on, right? So, we bring in experts on different fields. We bring in people that talk about asset protection and LLCs and seed capital and multifamily investing, commercial notes. We bring all these people in to educate you over these 3 days on top of Chris teaching what's called his master course. And, I know a lot of you have been through the virtual workshop already. Mitch, Mark, Joni, John, just real quickly looking at my screen here, but a lot of you have been through it, and it's a really powerful 3 days. So we're doing our next one. We're doing them about every 6 weeks right now. So the next one's next weekend, Friday, Saturday, and Sunday, the 25th, 26th, and 27th. So if you haven't already, get enrolled for that, because that's going to teach you how to take this policy, especially down the road, once you start growing it and you get the money in there that you can start really using. We're going to teach you how to start using that to really explode your wealth and take you to reach your goals, whatever those might be. And to me, when I do a lot of these calls, JDew, and thank you for everything you've shared. You gave me some nuggets that I'm definitely going to be using on my own calls. But it's for me, it's the biggest thing, because I do come from the real estate investment and entrepreneur background, is just the fact that you can have this little ball right here that has your money in it, that's compounding year after year after year. And you can use that money at the exact same time to do all these other ventures, to start a business, to buy real estate, to do whatever, and grow your money while it's over here growing for you and you're not even thinking about it. And then you see on the news, like, the stock market's going to crash, or all these jobless, like, who cares? This is guaranteed compounding interest. Like, you don't have to think about it. And I'm a big believer that you only have so much bandwidth. You can only control so much. Like, I'm very big on lists and tasks. And it's not that I forget things. It's just, I don't want to think about them. So if I have it on a list, I don't have to constantly throughout the day think, okay, well, I got to do this next. I got to do that, or I got to accomplish before the end of the day. I just look at my list whenever it comes to the time. And that allows me to focus my bandwidth and my mind power on other stuff, right? So it's very, very similar. You're not worrying about your future, because even if you did nothing with this policy, it's still going to explode for you over time, especially, over 20, 30, 40 years. So you can concentrate your mind and everything that you're doing on that other task at hand that's growing your wealth and growing that money that, you're using right now, because you can take the loan out and not repay it and go blow it and buy a boat or whatever. But as Caleb was saying, don't do that. Save, but go out there and flip a house, make 30 grand, maybe the first one, start another policy, but maybe the second one you go do, have some fun, because I'm a big believer in rewarding yourself too. So, I always used to teach this when I was coaching real estate. The first deal you do, definitely take some of those profits and invest it and be smart with it, but take some of it and just go blow it. I mean, Mitch just moved to Vegas, flip a house, go to the casino, put 10 grand on black just for the hell of it, because you can, right? And it's a crazy example, but I really am a big believer, and that's going to really motivate you to go. I always say the first deal you do is going to be the hardest, but after that you see and you get a taste of it, right? These policies are the same way. And I know with Brent Kessler, was talking to me the other day, the founder of Money Multiplier. He was saying over 90% of our clients open additional policies. And why is that? Well, first off, they listen to JDew and they say, okay, instead of putting all my money, I'm going to do something I'm comfortable with the funding. But once they have it, they get a taste for it, right? And they start really going. And it's really a cool thing. So, definitely get enrolled for that workshop. You get a bunch of stuff with it. Chris has a bunch of other things going on right now as well. We have a bunch of fun things coming out. So not like trainings, but just fun little things that we're going to be doing. We got different contests that we're coming out with, where we're going to challenge you to go out there and share this with other people, and you can win all these cool prizes and stuff. So, keep an eye out, watch your emails, pay attention on the Facebook page, and follow, because we have a lot of really fun things coming up. And, we have affiliate programs for MSTV, where if you invite people, so if you're not part of the affiliate program, let me know. I'll get you in touch with Gabby. Gabby runs that program for us. She's, or maybe some of you talk to Gabby actually, because she does a lot of these Money Multiplier calls as well. But so let us know what you need, what you're thinking, and we're here to support you and help you and just help your growth and your future. And that's really what it's all about, right?
Love it, guys. So appreciate. Hey, Stephen, thank you for letting me be on here with you guys. I want to let you guys know that our Cash Compound Crash Course is available to you for being a part of this group tonight. It's available for free. Okay, so you can see my information in the chat. Go back and look. But I'll put it in again here in just 1 second. Hopefully I don't talk too long and Stephen closes it out before I get it back in there. But I like to talk. I like to have a good time and meet folks. But so if you go to the cashcompound.com and you go to the crash course, for those of you who have not familiar or whatever, we're going to help you understand how to grow your wealth and without ever risking it, giving it up to someone else or losing control, and what this banking system is about and controlling your money. You can type in this code and it will give you access. Okay, for those of you who are not in, if you type in the code Money School, one word lowercase, if you're not in there, for all of our Money School BFFs out there, you can get into that course. Okay, we have other courses in there that help you advance beyond that, but I want you guys to understand that this is not something that we're just literally not trying to make money off of. You can get in free, but get my information. Hit me up in the text. Whoever hits me up in a text first, I'm going to give you another course. I'm going to discount another course for you. Whoever the first person is, you got to look up there and find my phone number. It's literally my phone number. I'm sitting right here in South Carolina right now. I'm going to give you another. Teresa is on a mission. I saw her look at I saw her look at the screen, kind of funny. I'm nervous. Lynette's okay. Maybe first and second. I don't know.
Here it comes. Love it.
Okay.
And while he's checking that, any last questions? Did we miss anything?
Yes.
Is there anything else?
So I will. I'll hook you guys up. Okay, tonight. So I may have unleashed a can here. So we want to help you guys. I want you guys to know that the Cash Compound is here for you who have already got in the process. That is Jonah, my brother. Tell him that you saw us here tonight. Thank you so much, Stephen. If you use that code Money School, lowercase, one word, you'll get into the crash course for free. We're here to help you crack the code to cash flow and build your wealth.
Yeah, Kevin, it's cashcompound.com. I think a couple people, JDew, joined late, so you might want to repost on the comments just so we have it right there fresh for them. Yeah, it's really good little short videos, to the point. Okay, cool. So any last minute comments or questions, thoughts, anything like that before we wrap up? No? All right. Well, excited for everyone that has their policies in motion and going through the application process, and you'll be meeting with JDew and his brother to get your mapping going as soon as that policy is in force and ready to go. If you haven't already gotten the process started, I know I've talked to quite a few of you on here. Let me know when you're ready to get started with the application. Like JDew said, it doesn't cost you anything. It's all on the insurance company to qualify you. It's up to them. So, get started. As he said, you'll never write us a check. Money Multiplier is here for you for the support, ongoing training. Chris and I and JDew, we're all committed to, continuously educating continuously. And as soon as COVID passes and we're back to, traveling more, we're going to be going around the country. So wherever you are, I'm in South Florida myself, but wherever you are, we'll come out. And whenever we're in your area, we'd love to see you in person, love to meet with in person. I mean, these Zooms are great. And thank God we have them during this time, but there's nothing like meeting in person and having real networking and things like that. So, look forward to that. And congratulations for everybody for committing their time and being here for 2 hours. And, that'll show down the road. That's what it's all about, is always learning, always improving, and focus on your goals, man. Just make them happen. That's what it's all about.
All right, guys. Thank you so much. I got a couple texts, so I'm gonna go ahead and hook everybody up who texts me here in a second. I'll figure it out here in a second. But so I'll give you guys a discount on something, or potentially something for free. We got a great new course, Pay Yourself First. So I may give you that one for free. And Mitchell, don't go blow all your money on a boat. Don't worry about
that. Hey, 13 black. I'm down. Here we go.
Right.
All right, guys. All right. Well, thanks, everybody. Thank you so much for being part of Money School TV. I know Chris had to take off, but he appreciates you guys more than you'll probably ever know. And we're going to keep pumping things out. So just let me know. Everyone has the links in MSTV. If you need to book a call, please book a call. Talk on the phone all day and love it. So look forward to speaking with you guys, and have a great evening. Thank you so much.
All right, guys.
JDew.